everyone, welcome to the Techy Accountant's weekly vlog. Today we'll be talking about 10 things to note when preparing financial statements. We all know that financial statements is one of the key requirements of every accountant or finance professional. And preparing financial statements is perhaps one of the most important steps of the accounting cycle. This statement represents the end purpose of the financial reporting and accounting system. So it's a very, very important, will I say, document that every organization usually requires from the accountant or finance professional. Preparing financial statement can be a simple or a very sophisticated process based on the company size and its requirements. So companies are large and some are small. It requires different things to prepare the financial statements. Some may even require footnotes and disclosures as well. Today, I'll be sharing 10 things you should pay attention to when preparing financial statements. Yes, I know you know it already, but then take note of these 10 steps. Number one, verify receipts of suppliers' invoices or all the vendor invoices. Compare the receiving log of accounts payable to ensure that all supplier invoices have been received, and also accrue the expense for any invoices that have not been received. Point 2. Verify issuance of customers' invoices. Compare the invoice log to the accounts receivables to ensure that all the customers' invoices have been issued. Issue any invoices that have not yet been issued or that has not yet been prepared. Also, confirm payment of invoices by customers in the bank's account and credit it on account receivables. It's very important so that you don't leave money on the table. Point 3. Accrue unpaid wages. Accrue an expense for any wages earned but not yet paid as of the end of the reporting period, which could be at the end of the month or quarterly or semi-annual or even at the end of the year, depending on what you're working on. Number 4, don't forget to calculate depreciation. This is very important. Most, will I say, accounting software does not automatically include depreciation, so you must calculate it. Calculate depreciation and expense and amortize expense for any non-current and intangible asset in the accounting record. Remember, amortization is for intangible assets and depreciation is for tangible assets or non-current asset. Number 5 point, value inventory. Conduct an ending physical inventory count or use an alternative method to estimate the ending inventory balance. For example, if you use a software, you can easily get it from there. Use this information to derive the cost of goods sold and record the amounts in the accounting records. Now we'll move to point 6, reconcile bank accounts. It's very, very, very important because sometimes payments are made not even within the bank account, or they are not yet made, or they are pending, so that's why reconciliation is very important. And make sure you create journal entries to record all adjustments required to match the accounting records to the bank statement. It's very important. Your bank statement must tell the story that your accounting record is also saying. Point 7, post account balances. Post all subsidiary ledgers balances to the general ledger. Point 8, review accounts. At this point, it's very important for you to review these accounts to ensure that there's no error. Review the financial position accounts and use journal entries to adjust account balances to match the supporting details. It's very important. You have to pay attention to the balances in the financial position. Point 9, review financials. Don't ever finish preparing your financials and you would not review. It's a recipe for disaster. Our advice that you print a preliminary version of the financial statement and review them for errors. There will likely be several errors, so create journal entries to correct them and print the financial statement again. Repeat until all errors have been corrected. Then the last point, but not the least, that's point 10, accrue income taxes. Taxes is usually the last thing that we do. You have to calculate your taxes. Accrue an income tax expense based on the corrected profit or loss statement, and make sure you pass the journals accordingly as well. I hope you found these tips useful. Until I come your way again, I'm a techie accountant. Are you? Bye.